Hi there guys, and welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, blockchains, and cryptocurrencies. I am the host and founder of the Cryptoverse. My name is Chris Coney. I'm also the founder of Cryptoversity.com, the online school that pays you to learn about Bitcoin, cryptocurrencies, and blockchains. Find out more at Cryptoversity.com. All right, let's start the day with the market roundup. You'll see, if you look on CoinMarketCap today, you'll see that, if we just get rid of this advert, you'll see that Bitcoin is down 12.5% in the last 24 hours. So this is definitely the price correction from the recent extension. In Bitcoin trading and all trading, you always have these cycles of price. You know, there's sort of a cycle to everything, and price in the markets is no different. So what goes up must come down, and what goes down must go up, and all that kind of thing. So you have a phase one in trading, which is usually the movement up in price, but it can go up indefinitely. So eventually the appetite for the price reaches its peak, and then you get a phase two, which is a sell-off, and the price returns to equilibrium. Now, in an uptrend, that would mean that the price doesn't come back down to where it was, but it does give back some of the gains. So if something goes up from $100 to $200, it might pull back to say $150 before taking off again, right? So the phase one would be from $100 to $200. The phase two would be from $200 back down to $150, and then the cycle starts again. Another phase one would go from $150 to $250, and so on. You get the idea. So that's the price cyclicity, as they call it in trading. If you want to know more about trading, go to cryptoversity.com and take a course on how to read a chart and how to trade. Right, so that puts Bitcoin's market cap down at just over 9.2 billion. That's down quite a bit from 11 odd the other day. Ethereum's still, the DAO thing is still not resolved. Ethereum's gone down again 13%, and down $12.82. Now that was up 26% yesterday, Ethereum. And then the DAO, that was up 48% yesterday, is now down 15%. So the prices are all over the place. Oh, Dash is down 7%. That doesn't make much sense. This is there was an article on Bitcoin.com news about capital moving out of kind of creating a negative effect across the whole cryptoverse, which is interesting. So if there's a major scare in the crypto space, people who are uninformed, who own cryptocurrencies that are completely unrelated to the crisis, like Dash, for example, they might sell because they're frightened that the whole cryptosphere is going to come down or something, which is seldom the case, right? Let's see what else is going on here. Dogecoin down 12%. Nothing else of really any note today. Really, most of the attention's on Ethereum, the DAO, and Bitcoin. So let's take a look at the chart. Oh, how interesting. So according to the Bitstamp chart on Bitcoin Wisdom, so it looked originally like the price was going to hold above the line that I'd drawn at $657. And it did on whenever that was, Tuesday. But then yesterday it broke down below it quite significantly. And now it's still below that. In fact, the low of today was $540. See, that's a wild move, down from the recent high of 778. However, let me call out my price lines here. So I've drawn these Fibonacci retracement lines, and the one at the very top of the screen that I'm looking at is what's known as the 61.8% retracement line. That's at $776, which is pretty much where we got to recently. 778 we got to. And then I was looking at the next line of support, which was 657. We broke down through that. And then the next floor is what's known as the 38.2% Fibonacci retracement line, and that price is at $538. So that kind of coincides with the lowest price of today. So the lowest it got today was 540. So again, we've only got one piece of evidence so far to suggest that 538 is going to hold as support. But if you look at the chart, you see the phase 1 move up all the way up to 778, and then this phase 2 pullback. And if you I've started recording these Cryptoverse episodes, including a screen capture, because often I refer to the Bitcoin chart. So I'll continue to voice it, so you can just listen to it, and you don't absolutely need the visual. But if you do look at the YouTube version of the Cryptoverse, you'll see that I have these two what are called moving averages, and they just show literally the average price that moves, because the average always moves every day. The price updates, and that's where you can look for what's known as an overextension. So if the price gets too far away from a moving average, the bigger the gap. It's like an elastic band. It always wants to snap back to a point, and now we've actually done that. I use what's known as a 50 period moving average and a 200 period. So the period is days. So one moving average is based on the last 50 days of price data, and the other one's based on the last 200 days of price data. And at the minute, we've pulled back to the 50-day moving average. So that could be enough to rebalance people's appetite for the price, you know. So we will see. Now, if you had confidence that this was the end of the sell-off, this would be like the best time to buy it, because it's on sale. The next time it takes off in an upward move, this will obviously that'll be the greatest gain. But I'm not much of a speculator, right? I don't think that's it's gambling at the end of the day. So that's not a sustainable way to make money. You can trade Bitcoin and make consistent profits, but I would never look to catch the top, the highest price, the top of a move, and I would never try and catch the bottom, because that's just completely unpredictable. So it's better to have a trading strategy and stick to it. Again, check out cryptoversity.com if you want to actually learn how to trade strategically. Moving on to the Bitcoin.com news, let's go into there's the three featured articles as always. Circle raises $60 million, expands to China on global ambitions. That's a good thing. Circle is becoming the PayPal of Bitcoin. The app is super simple, the website's super simple, the interface is super simple. Check out the Circle app, and you'll see that it even calculates stuff in your local currency, but all of the actual transfers between users is done in Bitcoin, but it hides all the complexity of Bitcoin from the user. So it's one of the best consumer experiences of a Bitcoin wallet that I've seen so far. So expanding to China will mean that from my Circle app on my iPhone, I'll be able to send money via the Bitcoin network directly to someone in China, which is fantastic. I mean, that's so fantastic. You might be able to order, if you order something from a manufacturer in China, you could just, Circle it to them, couldn't you, right? And while I don't think Circle sells itself as a remittance service, there's the possibility that you could use it for remittances in the way I've just described, right? Another featured article here says Coinbase integrates PayPal to broaden its reach. Now, I would prefer that to be the other way around. I would prefer that to say PayPal integrates Coinbase to broaden its reach, but that's not the case. It looks like PayPal have added, the other way around. Coinbase are now allowing people to buy Bitcoin using PayPal, right? Which is okay. That's all right. Whatever. And then the third featured article says community opinion of Ethereum uncertain following the DAO attack. So let's go into that one. This is the thing that everyone wants to know probably at the minute, the DAO stuff. So community opinion of Ethereum uncertain following DAO attack. On the 17th of June, it was reported that the DAO was hacked and had $50 million stolen from its funds. The initial reaction was dramatic, as both the DAO token, DAO, and the Ethereum, ETH, lost a large percentage of their values within hours. ETH DAO values plummet. The event has spared a discourse on how successful both could ultimately become, with some still optimistic about their respective futures, while others are a little bit more pessimistic. In the hours after the DAO hack became known, both the DAO token and Ether began to dramatically dip in price. Ether and DAO bottomed out after losing 20% and 55% of their respective values before the hack. The two cryptocurrencies initially recovered, with Ether rebounding back and settling at $18, but this is still ultimately represented a loss of 9% over a 24-hour period. Just as recently as January 2016, Ether was only trading at about 70 cents before beginning its upward trajectory to $21 before the exploit was discovered. Wow, that puts it into perspective, doesn't it, guys? As recently as January of this year, Ether, an Ethereum token, was valued at 70 cents. And then literally days ago, so that took 6 months for Ether to reach $21. Well, that is a fantastic and meteoric rise in value. That really does put it into perspective for me. I don't own any Ether right now, and I'm probably not going to in the short term till this is all sorted out. Anyway, so moving on with the article. This success had been seen as largely the result of the experimental DAO, which started as a decentralized investment vehicle for Ethereum-based startups. In many ways, it began with the DAO's record-breaking ICO, which raked in over $150 million, the largest crowdfunding campaign ever. The excitement over the DAO boosted the value of Ether to nearly triple its price of $8 in April when DAO tokens first became available, to its all-time high of $21 in mid-June. So yeah, because DAO is it's a derivative, I guess, of the Ethereum network. You invested in the DAO with Ethereum, so that's probably, like it's saying there, that's probably why Ethereum, a lot of money came into Ethereum, because in order to get to the DAO, it had to go via the Ethereum network, and that's what pushed the value of Ethereum up so significantly. Thus, it is not surprising that when the DAO token's price began to plummet, it dragged Ether down with it. A larger volume of people were buying Ether simply as a way to buy DAO shares, which subsequently attracted speculators to the currency. This, of course, brought up the price of Ether even more. In essence, Ether's price was being boosted by the DAO's hype, and it all came crashing down when everyone started moving their money out of the DAO token. Okay. However, some of the downward price pressure was at least partially related to the concern that the Ethereum protocol itself had been exposed along with the DAOs. Ethereum founder Vitalik Buterin quickly responded to the incident to ensure people that all was well within the platform. Maybe that should say to reassure people that all was well with the platform. So yeah, I'm just going to make this clear as well. There's the bug is not with the Ethereum code. So the Ethereum network is absolutely fine. It's not a flaw or a loophole or a bug in Ethereum's code. It's not like that at all. Ethereum is the network for writing smart contracts and then executing them on the Ethereum decentralized computer, right? The mistake was with someone who used the Ethereum network and built an app on top of it called the DAO. And it's that code that was flawed. Like, for example, if a website gets hacked, that doesn't mean that the internet is insecure, right? The fundamental infrastructure of the internet you don't just throw the baby out with the bathwater. Just because one website gets hacked, you don't suddenly lose faith in the internet, right? That's exactly the same metaphor I can use to clear Ethereum's name. Just because one careless programmer built something on Ethereum and that app was flawed in some way, that has no impact on Ethereum whatsoever, right? Just to make that clear. However, without that understanding, you would be forgiven for getting rid of your DAO tokens and your Ethereum, because unless you understand the technical distinctions, you're gonna just panic and you're gonna run for the door. The trouble is, this is my take on the crypto space as a whole, and on the DAO crowdfund specifically. There's a problem with these ICOs, these initial coin offerings, where a lot of the money coming into them is coming from what I would call amateur investors. So they're amateur in the sense that they are inexperienced, and they're amateur in the sense that they are uneducated on how to invest. So things like the fundamental principles that I mentioned the other day on the Cryptoverse, like you never invest any more than you can afford to lose. That's a fundamental principle of investing, right? So before anyone invests any money, they should have a financial education, which is why I've took it upon myself to build Cryptoversity, because the mission statement says to level the playing field when it comes to opportunities for financial freedom, right? And if you're uninformed, you're guaranteed to lose. Anyway, moving on with the article here. In a statement, Buterin attempted to put people's mind at ease by saying, quote, "This is an issue that affects the DAO specifically. Ethereum itself is perfectly safe." Close quote. Is Ethereum doomed? However, not everyone thinks all is well with Ethereum. In fact, some people like Daniel Krawitz think that Ethereum is basically screwed in the long term. On Monday, June the 20th, Krawitz wrote an op-ed on Nakamoto Institute website bluntly titled Ethereum is doomed. And then they post a link to that on nakamotoinstitute.org. With a title like that, it's pretty clear Krawitz doesn't have much confidence in the long-term future of the Ethereum platform. Essentially, he believes that Ethereum developers built the platform in such a way that it allows hackers a legal way to exploit bugs in a situation where bugs should be expected to arise. That's an interesting point of view. That reminds me of the other day when Andreas Antonopoulos did an episode of Let's Talk Bitcoin, and he read out a letter that was allegedly written by the attacker that said that he hadn't done anything wrong, or she or they hadn't done anything wrong, because in a smart contract, the code is the contract. And this attacker allegedly said that they read the code and they found this, what we would consider a bug, the ability for him to drain the ability to drain money out of the DAO was a feature because it was explicitly stated in the code, and therefore it was allowed by the contract. Now, the fact that it's unethical or immoral, that doesn't matter. Computer code doesn't recognize morals and ethics. It recognizes logic, right, and what was written into it. So he was basically saying that was the terms of the contract. I invested in the DAO. I accepted the terms of the contract, and then I used a particular clause, let's say, in this case, a clause would be one line of code that allowed him, her, or they to siphon money out of the DAO. And he was saying that's perfectly legal because it was allowed under the terms of the contract, right? Which is very interesting. And this guy, whoever this is, Daniel Krawitz, is saying that Ethereum is screwed because the Ethereum developers built the platform in such a way that it allows hackers a legal way to exploit bugs. Well, essentially, yes. In the same way that the legal system is sometimes set up to favor one party or another. You know what I'm saying? The amount of injustice that's been done in the legal system due to a technicality of law or a technicality of a contract where one word was misplaced or one phrase was misinterpreted or whatever has led to people unfairly, immorally or unethically losing a whole load of money or even being incarcerated. So that is a problem of law, not necessarily a problem of Ethereum. So I'm going to defend Ethereum on that one, on the basis of what I've just said. Anyway, Krawitz made his opinion known that he believes his fundamental problem is, at the bottom, the fault of developers who he deems to be incompetent. Well, that's a little bit strong, but yeah. Quote, "If I had looked into Ethereum more carefully, I might have noticed that economics was not the only subject that Ethereum devs did not understand. They also don't understand law and software engineering. They created a situation in which bugs would be expected to arise in an environment in which bugs are legally exploited. That is hacker heaven." Yeah, I guess so. But isn't that just the same as these predatory law firms that set up and are actively looking for loopholes in the law to exploit. And then they would actively seek a client who could benefit from that exploit, right? In the UK, we had this whole thing a few years ago. We called them ambulance chasers. And these were law firms who would proactively go out there and find people who had been injured in an accident of some kind. And then they would take someone to court and try and claim compensation for that accident. So they particularly liked it if you'd hurt yourself while at work. If you'd anything. I mean, it got ridiculous. Even car crashes. If you'd had whiplash, after a car crash, even if you'd recovered from the whiplash, the fact that it was traumatic, they would then go and claim, compensation from the insurance company. Whoever hit you in the car crash, they would get their insurance company to pay out and take them to court and blah 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 blah. And it was predatory behavior, and we used to call them ambulance chasers because of that. As soon as, literally, if you can imagine that, it's a metaphorical ambulance chaser, but it means that obviously if there's an ambulance, someone's injured in there, and there's this idea in your head that the lawyer is following the ambulance to the hospital so that as soon as the patient is out, they can say, right, do you want to claim compensation? Who do I want to sue? Do you know what I mean? And it got ridiculous. It got absolutely ridiculous to the point where now the law has begun to change on that. But isn't that sort of part of the free market? In the sense that, and you can use the word exploit and say, oh, exploit, that's an evil word. But, all right, you could say it another way, or take advantage of, or capitalize. They all pretty much mean the same thing. So in the free market, entrepreneurs capitalize on, exploit, or take advantage of opportunities, right? Now, all of those words I've just said have neither a positive nor a negative connotation, because until you put it in context, you can't judge it ethically or morally. So if there's a gap in the market for someone to come along and begin educating people in the world about cryptocurrencies, right? That was a distinct need or problem that I saw in the market that I am taking advantage of, exploiting, or capitalizing on, you could say. Now you might think that's noble. However, that is neither noble or not noble. It just is. That was a gap in the market. There was an incentive for me there to go in and serve that market and be compensated for it. That's how capitalism and the free market works. You know what I mean? So what I was getting to with this is the free market and capitalism also, it punishes mistakes. And that just comes back to human beings not wanting to take sort of responsibility for their own actions, I guess, and not willing to bear the consequences of their own actions. Even if the consequences were unintended, you still have to bear the consequences, right? And that's the only way you learn. Unless it hurts, you don't remember the next time around, right? Anyway. So he reckons Ethereum is doomed, this guy Daniel. Whether or not Ethereum and the DAO will ultimately be successful or failed projects is still up in the air, as only time will tell. Although pessimism initially followed the DAO's attack, Ether has rebounded in price, and despite wild fluctuations, is currently trading around $15 at press time. What do you think will ultimately happen with Ether and DAO? Let us know in the comments below. I've just thought of something else. The trouble is, the reason why the DAO is managing to have such an impact on Ethereum's price is because of how young the Ethereum community is. So, for example, let's just take the UK pound, right? The British pound sterling. There are so many companies using that currency, right? That if a single British company goes out of business, nobody cares, right? Because there's so much other activity going on. There's so many more transactions, and there's so much more liquidity based on the UK pound that it doesn't affect the price at all, right? It probably does on a microscopic level, but it will be imperceptible. It's so small. And that's the problem with Ethereum. If the Ethereum community were more developed, and there were dozens, hundreds, or thousands of apps, smart contracts, and many different DAOs based on Ethereum, then the price of an Ether token would be the sum total of all of that activity. And then if one of the companies blew up, went out of business, like the DAO, well, it might affect the price a little bit, but maybe the DAO would only represent 1% of the whole Ethereum community, and therefore it would only affect the price by 1% or something, because Ethereum would have the rest of the businesses and the ecosystem to back it up or to uphold the price. But that's exactly the problem. Because the DAO was such a huge success in terms of the crowdfund, it was just too big, too early in the Ethereum community. And that was an observation on Let's Talk Bitcoin the other day, that perhaps it would have been a good idea at this stage of the game to limit the crowdfund to a particular, to a particular amount. Like, for example, the Peer Plays crowdfund recently, which, full disclosure, I participated in. The Peer Plays crowdfund, it had an initial crowdfund in 2 phases. The first phase was a 100,000 tokens, Peer Plays tokens, that went for $2 each, and then the second lot of tokens was another 100,000 that went for $3 each. And then once they sold out, they sold out. It wasn't like an infinite pot of crowdfunding money, just to do anything with. And then when the testnet for Peer Plays goes live, there's going to be another 500,000 tokens, which is going to be released at a specific amount every day, just so that everyone can get in there. But the point I'm making there is that there was hard limits on it, right? There wasn't just like with the DAO crowdfund, there was no ceiling. So that's how come it was able to raise such a huge amount of money. And that to me smacks of greed, just a little bit, because could the DAO have turned into a $250 million concern? Yes, but it would have been better to do that over time. And the only thing that prevents people from having the patience to grow slowly over time is greed, quite frankly, So there we go. That's going to do it for this edition of the Cryptoverse. There's the Cryptoverse with me, Chris Coney. I'd like to thank you for listening today. You can check out the Cryptoverse on iTunes. You can check it out on the Google Play Store, and you can also check it out on Stitcher. And there's apps for all of those 3 different things. If you go to cryptoversity.com/podcast, you can make a donation to the Cryptoverse. If listening to the Cryptoverse is something you enjoy doing and you like the content and you want to see more of it, please contribute a bit of Bitcoin towards the running costs by going to cryptoversity.com/podcast, and then you'll find the Bitcoin address there. You can also find the QR code on that page so that you can make a contribution. Of course, as ever, all contributions are appreciated. So that's all for today. Check out cryptoversity.com if you want to check out the online school that pays you to learn about Bitcoin, cryptocurrencies, and blockchains. And until next time, guys, it's me, Chris Coney, saying bye for now.